Today is a day of great news all across the board. First off, the Dow Jones, the S&P 500, and NASDAQ, and also, since these American markets have gone up, the Asian markets are also going up as well. So pretty interesting what's happening right now. Speaking of Asian markets, Japan, for the first time in 17 years, this is an article about inflation. Well, America had an inflation talk. Japan had an inflation talk, and both went separate ways. Japan, for the first time in 17 years, has raised their rates. That's right. For the past 17 years, they haven't had any inflation raises. There we go. Well, in America, we know a thing or two about inflating rates. 9, 10, 11 times in a year, no problem. Well, the reason the markets have gone up is because of the news. Today, the news was essentially before in the morning, everybody was talking about what's going to happen with the Federal Reserve. Are they going to raise the rates or are they going to stay the same? U.S. Treasury yields were a little changed as of this morning, and investors were awaiting the Federal Reserve's latest interest rate decision, which we now know what it is. The 10-year Treasury yield was at 4.295% after dipping by less than 1 basis point. The 2-year Treasury yield was last down less than 1 basis point to I can't talk today. All right, let's try this again. The 2-year Treasury yield was last down less than 1 basis point to 4.692%. Yields and prices move in opposite directions, and 1 basis point is equivalent to 0.01%. So, right now, we're in an interesting time where special rate CDs, the best one I found was 5.4% by credit union. The best bank CD I found was 5.3%. You've got T-bonds right now that are over 5%, which isn't bad considering everything. You've got most banks offering high yield savings accounts, high 4.5s, 5s right now. So very interesting. Right now, all of this news was basically, hey, listen, not much has changed. So why should we change where inflation's going to be? So the decision was that it's remaining unchanged for now. So 1-month Treasury, 5.366 yield, US 3-month Treasury, 5.381, 6-month, 5.316, 1-year Treasury, 4.997, 2-year, 4.6, 10-year, 4.27, and 30-year, 4.454. Not bad. So essentially, Federal Chairman Jerome Powell, everybody was expecting probably everything's going to be unchanged, and he was slated to give a press conference after everything regarding inflation and the central bank's balance sheet, and he did. So there's less optimism about where the rates are probably going to end towards later 2024. Policymakers right now are looking for more data to provide them with evidence that inflation's sliding back towards their 2% target. And with that, the Federal Reserve is holding their rates steady. So updated forecasts are saying that an average of 3/4 point rate cuts in 2024, that's probably what's going to happen. It's similar to what policymakers were projecting for December, and investors were waiting gladly for that news. The Dow Industrial Jones jumped 401 points, or 1%. So now it's well into the 39,000 range. The S&P 500 well above 5, upward to 5,500. And cryptocurrency also, because of the news, Bitcoin was at 62,000 yesterday, and now it's back in 67,300 range. So not bad at all. I don't think we really know if this is a bump on the road or something more, Jerome Powell said to reporters. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully. Inflation was a little hotter than expected in January and February, and it's still nowhere near perfect. Not everybody's happy. You know who's happy? The boomers who are just chilling and, they paid off their houses. They don't even care at this point. They're the ones who are coming into the bank and saying, hey, I want to send $100,000 to some random person I don't know, some random person in, 5,000 miles away from me in this mysterious country. And you can only advise them. Could be a scam, but they know better. They were the ones that bought their houses for $50,000. Now the house is worth $2 million. So they don't care. Even if they lose $100,000, they still got a lot more where it's coming from. So there seems to be a slim chance of a rate cut at the next federal meeting. That's in May. And there's a higher probability of that happening in June. This is going to impact everything. Inflation and these rate cuts, well, it'll impact mortgages. It'll impact auto loan rates. It'll impact credit card rates, everything. And working at a bank now, I've just completed my first month because altogether with the previous role and the current role, I've been looking at rates. I'm now going to be more in tune with this. I've been hearing what the financial advisor's talking about, and I've been listening in on the tax advice given. I've been listening into what the higher bankers are discussing, and these are only tidbits, but I'm very excited to start learning more about this industry because it seems like for many people, finance is this mysterious voodoo land, but it's just all it takes is you got to get right into it. Just like with crypto, it seems all so crazy at first, but then it starts to make sense. The more research, the more studying you do. And right now I've just been given a lot of training material to study, and that's exactly what I'm going to do. And I'm excited about it. And by the way, I have to say that making that switch from the previous bank to this bank is a whole lot better. It is a much, much better experience. First off, I'm getting paid more, so that's the number one thing that matters. But second off, it's just completely different. And, one company can be amazing. The other company can be not so amazing. And I'm glad I have made that switch. So just wanted to say that. Also, just received news that I completed another class. Woohoo! So now it's 53% going on 54. And essentially what that means, we have 18 classes, technically 17 classes in one final paper, the capstone project due. So hopefully December 2024 is graduation goal, and then on to master's. Here we go, baby. And then what I really should do is focus on, get a master's in finance or economics or something that will tie all this in together, because really the end goal is, yes, retail banking's nice and good benefits and not many hours and whatnot, and it's really laid back. But investment banking, private wealth, and, financial advisory positions, that's where the money's at. And that's where my heart's at with cryptocurrencies. And it's interesting to hear what financial advisors are talking about in terms of their thoughts about cryptocurrency. But it all ties in together, folks. So the Federal Reserve has had the highest amount of, first off, the greatest frequency in terms of the inflation rate hikes last year, and also the highest interest we've seen in the past 2 decades, where the benchmark rate right now is going to be between 5.25 and 5.5%. Now, when you go back to the 1980s, it was pretty crazy, and you had Black Friday and whatnot. Black Friday. Okay. So we saw mortgages for excellent credit 8-9%, and being in the 6s, now we're in the 5s. It's better. But everybody wants to be back towards 2 or 3%. That's probably not going to happen for quite some time. But sliding back down, probably in June, they're going to reduce the rates. So we're going to get a little bit better auto loans and mortgage and HELOCs and all that. And what they're looking at right now is the economy is in relatively good shape, because they want to ensure that inflation, keeping it high, well, it's going to make sure the average middle class Joe, everything's going to be great. There's going to be a tempered demand. There's going to be prices back under control, which is not the case, because there's still going to be manipulation from the markets, and you're going to have crazy inflation at the grocery store and at the gas pump. But that's a different story. So unemployment rate has remained at below 4% for the past 2 years, for more than 2 years now, and employers have added an average of 265,000 jobs in each of the last 3 months. Now, what I have to say is this is mostly entry-level jobs that have a lot of turnover, jobs that sometimes don't even exist, because these are the fake jobs that HR posts because they have to do internal hirings and external hirings, but they're going to hire internally, of course. But to abide by all the rules and guidelines, they make it seem like they're hiring, and it takes forever. For me to have gotten my job, I have sent out so many applications. The top banks, there were, I wanted a certain position, and I would apply for every position at every branch in like the nearby area. The top bank rejected me 9 times for 9 different positions. Another one rejected me 7 times. And I keep getting these rejection letters. I mean, you can imagine how many applications I sent out. I sent out, triple digits. And then we're talking also triple digits for sales. So sales and banking. I mean, easily, I sent out over 1,000 applications within the past 4 months. It's absolutely insane. Now I have a job and I'm happy. And first off, it's my first week, but it seems great. But there's a lot going on that, yeah, the economy looks like it's getting better, but not really. When you really start looking in depth, there's some factors that a lot of people are still very sensitive about, and that's why people don't necessarily want to invest everything right now, and that's why they don't want to buy cars, and that's why traffic's really slow this winter, is because people are panicking. But the top guys, the millionaires, oh yeah, they're making a bunch of money. So higher interest rates have taken a toll on the housing market. Sales of existing homes fell 19% last year. This is the lowest level since 1995. The average rate for a 30-year mortgage was 6.74% last week, which is still pretty insane. But hey, it's better than over 8% last October. And again, that's for excellent credit. If you're a first-time home buyer, if you don't have the best credit, you're at 690, that's a far cry from 830, and that's still good credit. It's not excellent credit. That's still good credit. Well, now you're going to be paying 9%, and that's absolutely insane for the next 30 years. So for a house, it's completely different where, okay, I need a car and the car is $10,000 and I'm going to be paying 20% interest. Yeah, that's insane. But okay, it's a 5-year, 6-year loan compared to a 30-year, especially if you're looking at an FHA, you put down your 3.5%, but you've got this giant balance where at 9%, that's huge. That's absolutely insane. So they're getting better, 6.74%. It's still not great. And let me tell you, not everybody, that's the average, but not everybody's there. Not every bank's there. Retail sales have slowed. Credit card debt has been mounting up. Repossessions have been mounting up. The amount of defaults on debt, the amount of bankruptcies, the amount of potential foreclosures, it's not looking good. The amount of people that have lost jobs. The number of card users that are now behind on payments, 30 days, 60 days, 90 days. There's a lot going into this. So if you're one of those who's in a tough financial position, I promise you aren't the only one. And this is from someone who's also in a tough financial position. So I feel for you. I know how tough it is right now. But we're going to get through this. Everything's going to be better. Let's hope, right? With crypto, with stocks, with everything. I signed up for an HSA account. I signed up for my 401k with this new bank. I am very excited because in 6 months, we'll get a 10% discount off of the stocks that I'll get for this company, and they pay dividends. So now, even though it's only going to be a teeny tiny bit, we're still going to start with the HSA and the 401k because there's 100% matching up to 5% in the HSA. Well, I know I will have dental bills, and I know I will have hospital bills and whatnot. So the HSA makes sense from a tax perspective. I've never had one before, but this year is the year to start preparation for investing. So next year we could start investing again. And this time, hopefully by the age of 30, it's all common. You're going to be a millionaire in 2-3 years, bro. I don't think so. The end goal is 10 years from now. We're in debt right now, but this is a better position we are in right now than 5 years ago. 5 years ago was absolutely insane. And it's go time, baby. We got to work hard. We're going to hustle hard. We're going to get a second part-time job. We're going to do whatever it takes to get out of this and save some money and invest, and we're going to get through it. It's a tough year, but it's going to get better, and that's the hope. Hopefully, if the interest rates fall down, if the prices of certain commodities get a little bit better, hey, you go to the grocery store and it's not as insane, there's certain aspects we could fight. So save on your avocado toast and you can get that $2 million mansion. False, but hey, there's other things we can do to combat this. Thanks so much for watching. Have a good rest of your day. We've had some increased interest on this channel as of recently and on the other channels. I'm very excited about that. If you're new to the channel, please consider subscribing and checking out my other channel. Link is in the description below. It's about Volvos and cars, and I wish you all the best. Have a good one and take care.